morning. You're watching Business World Live. I'm Danie, Laurel.
I'm Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Economic managers are seeing a deeper slump this year as COVID-19 related restrictions continue to be implemented in parts of the country. Despite this, the Development Budget Coordination Committee, or the DBCC, is optimistic that the economy will bounce back stronger starting 2021. The DBCC estimates a GDP contraction of 8.5% to 9.5% this year, following the prolonged imposition of community quarantines in various regions. This is deeper than its earlier projection of a 4.5 to 6.6% slump. The DBCC said that despite the lower projection, further relaxation of restrictions and improved healthcare system capacity will keep the economy on the right track towards full recovery. The committee expects the domestic economy to grow by 6.5 to 7.5% in 2021, followed by an 8% to 10% growth in 2022. Acting NEDA Chief Carl Kendrick Chua said next year's projected growth would depend on the further easing of restrictions and availability of vaccines. Chua said the country could remain under a community quarantine until the end of 2021, when vaccines against COVID-19 will likely be widely available. The economy remained in recession in the third quarter after shrinking by 11.5%. It followed a 16.9% slump in the second quarter. Meanwhile, the DBCC also raised its revenue collection target for 2020 to 2.85 trillion pesos from 2.5 trillion pesos in July. All right, markets have yet to digest those bleaker than previous forecasts, and they have the latest inflation print to contend with as well this morning. Break those numbers for us, Dan.
All right, Jess. So this comes out at 9 a.m. just after, that briefing yesterday on what's going to be happening, at least for the rest of the year. Now, you've got November consumer prices here rising by 3.3% year on year. This beats the estimate, let's say, which was 2.6%. So the prices rose at a pace which was much faster than economists had expected in November. Now, recall that you've got year-to-date inflation right now standing 2.6% year on year. And they said, this is the Philippine Statistics Authority, of course, that inflation print was driven by higher food and beverage prices. Now, recall that we have had economic managers warning against this, especially since we did see a couple of typhoons hitting agricultural produce in the month of November. And you can actually see, this is from Bloomberg, food prices were up by 4.3%. That's food and non-alcoholic beverages versus the 2.1% print increase in October. You've also got alcohol. Get this, Jess. Alcohol and tobacco up by 12.3% year on year, ang mahal na, versus 11.3% in the previous month. And in the National Capital Region, that's actually even higher than the average of the rest of the country. Our prices here in the capital up by 3.5% year on year. Now, let's take you over to the markets and how we are opening and trying to digest that. We're 30 minutes into the open here. We seem to be taking a bit of a pullback. We are down by 0.2%, but still hovering above 7,100 levels here. So recall that yesterday we were in the green for 3 straight days. We were up by 1.6% yesterday. And Phil Stocks' Jafet Tantiangcos said that yesterday, that was really on the back of all of this positive news on the COVID-19 vaccine. Now recall that you've got the UK having approved Pfizer yesterday, but there are now some concerns. You actually have the S&P 500 contracts. I'll pull out the global stocks for you so you can see that. They actually fluctuated this morning after we saw that the S&P 500 was spending most of the session at a record high. And then there was a report that said that there were supply chain problems. We've actually got some sources here from Bloomberg saying that there might actually just be a 50% delivery for the Pfizer vaccine because of the supply chain distribution problem. So that's quite disappointing number. But of course, more news needs to be taken taken from that. Now, another thing, though, that is pulling up the sentiment in terms of the vaccine story, a study from Moderna actually showed that its vaccine has the potential for durable immunity. So that's something very, very interesting to be watching out for, Jess, especially for markets. Now, another thing that Luis Limlingan from Regina Cap is saying that pulled the markets up was that unemployment print falling to single digits at 8.7%. You've got more on that later on. Nevertheless, you've actually got value turnovers yesterday pretty strong. That's 10.7 billion pesos worth of trades. Nevertheless, 8 straight days of net foreign selling. We lost about 477 million pesos from our foreigners who did a bit of an exodus yet again. Now let's pull out the financials because I did want to break some loan growth figures here for the month of October. A lot of eyes are on that. The BSP has been very aggressive, let's say, or preemptive is a better word, in terms of lowering the interest rates and increasing the loan growth. But you've actually got October bank net loans up by 1.9% year on year. And that is expanding at a slower pace compared to September, wherein we already saw the loan growth up by 2.6%. The loans for productive activities were up by 2%. That's compared to 2.3% last month. And you've actually got consumption rising naman, so the loans for consumption up by 8%, but that is still lower than how it rose in September. That was 9.8% up year on year in September. Now, another thing is the money supply. That was up by 11.8% in October. So that's how much money is going around in the system. That's M3. So it's still double-digit growth, but that's still a lower rate compared to a revised 12.12% increase in the prior month. So we're going to be asking our chief economist of Security Bank, Dan Roces, later on in the broadcast about these figures, Jess.
All right, Dan. Well, there's other one stock here that will get quite some interest today, and this time perhaps in a positive light. What's the latest on Manila Water?
All right, so Manila Water here, I'm trying to see whether they are actually on a trading halt or just moving flattish here. I think it's still flat from close. So we'll wait and see how the investors are reacting to this news. But nevertheless, they will be operating Saudi Arabia's northwest facilities. So, moving on from Manila, over into Saudi. So they might have to change their name here. So it's a consortium of Saur. I hope I'm saying that correctly. Saur SAS, Miahona Company, and Manila Water. So they've signed a management, operation, and maintenance contract with Saudi Arabia's National Water for the Northwest cluster. So under the deal, Manila Water Group will be managing, operating, and maintaining water and wastewater facilities of Medina and Tabuk over a 7-year period. Now here we've got some movement here. Manila Water up by 0.5% to 15 pesos and 58 centavos. Just it brings the 3-day rise to by 3.8% up. Now back to those unemployment figures, Jess. So as we mentioned, easing to 8.7%, but still, quite a high figure. You have more on that in terms of insights. Are we finally seeing a bit of an improvement in the job market?
Well, if you compare it to how we fared compared to the previous months this year, then definitely that is a marked improvement. But year on year, still an uptick here when it comes to unemployment data here. Again, to give everyone details on that one, we already dished out the headline figure yesterday. But again, October unemployment is at 8.7%. That is tantamount to 3.8 million Filipinos. Again, that is an improvement compared to July figures, wherein joblessness was at 10%. Or around 4.6 million unemployed Filipinos. That, of course, is also very much a welcome improvement here compared to our April peak at 17.7% rather, at 7.2 million Filipinos. But then again, when you compare that to October 2019, wherein unemployment was only at 4.6%, or around 2 million Filipinos. Now, Carl Kendrick Chua, acting NEDA secretary, is saying, that improvement is driven really by the reopening of the economy. However, he's saying, that could actually have been lower if the economy opened further in the past few months, coupled with safe and sufficient public transportation. One other interesting here is underemployment figures. That, of course, is that he says means the quality of jobs has improved, and the informal sector is performing. Again, just to give everyone an idea here, underemployment, or those looking for additional work, eased to 14.4% in October. That compares to July figures of 17.3%, and from a year ago figures of 12.8%. Now, what's one other interesting here is that, Dan, while unemployment eased, there is a noted decline in labor force participation rate. LFPR is actually at 58.7%. Compare that to 61.9% in July and 61.4% in 2019. Now, that led to net employment reduction of as much as 1.5 million Filipinos. In fact, the employment rate while higher at 91.3% compared to July figures of 90%. Now, the 91.3% is actually tantamount to an employment rate of 40 million Filipinos. Compare that to July, wherein 41.3 million Filipinos were employed. So, what gives why the lower LPFR or labor force participation here? Well, according to Carl Kenrick Chua, that is due to higher remittances here from overseas Filipino workers. At the same time, the resumption of schooling, forcing parents to actually stay at home to support their kids with online classes here. At the same time, he's saying that the typhoons also led to a reduction in the workforce, especially in the agricultural space. Now, ING Sneaky Mapa is saying, he's alarmed actually with one other thing here. That is a double-digit unemployment rate in NCR, which is at 12.4%, as well as in Calabarzon, which is at 11%. Given that both areas actually generate a bulk of the economic activity, is saying that the economy might actually remain hobbled in the near term because of that.
Alarming indeed. So NCR actually much higher than that 8.7% print. Now the big question here is how long, of course, until we see a bit of a recovery, or even is it even possible to go back to those pre-pandemic levels, Jess?
Well, could be anyone's guess. That is a hope, of course, but really depends on a number of factors here. If you ask BPI's June Neri, he's saying that really is dependent on the timely passage of the 2021 budget, supplemented, of course, by some of the proposed bills in Congress, particularly CREATE and FIS. According to him, that might actually lead to significant improvements in the labor market come April 2021. Otherwise, it would take another year before pre-pandemic labor statistics are actually achieved. He's saying as well, it's very important to actually instill confidence to return to the workplace here. But how do you do that? He's saying there needs to be a bigger budget for vaccination. He's saying that even workers from the private sector might actually not be confident to go out if their counterparts in the public sector are not vaccinated. On the other hand, you have Carlos Asuncion of Union Bank. He's saying that it might actually take until 2022 in order for the job market to actually return to its pre-pandemic level here. They're saying that there's a low chance of a rebound in 2021. He's saying that the markets will improve, but investment recovery to actually create more jobs for Filipinos will actually take time.
Okay, Jess, well, medyo chicken and egg problem here. Is there enough budget for a vaccine, and is there a vaccine to come? Nevertheless, we'll have more news when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess Delos Santos. The Philippines has raised $2.75 billion, or about 132 billion pesos, from its second dollar bond sale this year. This as the government seeks to boost state coffers amid economic slowdown. The Treasury Bureau confirmed the sale of $1.5 billion funds in 25-year denominated global bonds and another $1.25 billion in 10.5-year bonds. The 25-year notes were priced at 2.65%, while the other fetched a coupon of almost 2%. The Banco Central says these were the lowest coupon rates secured for the debt. Appetite for both orders were strong, with a total for the two tranches peaking at $8 billion. The Bureau attributed the strong demand to favorable market conditions due to the positive news on COVID vaccines. Proceeds will be used to support the 4.5 trillion peso budget for next year. An unsolicited proposal to build the modified LRT Line 6 is now under NEDA evaluation. The Transport Department says Villar Group's Prime Asset Ventures, or PAVI, made the bid to create a new LRT line. Phase 1 of the project will supposedly extend the existing LRT-1 system from Bacoor all the way to Dasmariñas, Cavite. The cost of the proposal is pegged at about 73 billion pesos. Other unsolicited PPP projects that are now up for approval include the Fort Bonifacio Makati SkyTrain, the NAIA Rehabilitation, the Bohol International Airport, and the C5 MRT-10 project, among others.
Legislators are calling for more stimulus to help the economy recover from the pandemic. They add that only the government can provide this boost, as the private sector is still reluctant to invest and will likely remain so until next year. For one, Senator Ralph Recto expressed support for stimulus measures, including the proposed Bayanihan 3. Now, over at the Lower House Economic Affairs Committee Chair Sharon Garin has filed a Bayanihan 3 bill that's calling for a 247 billion peso package, while Marikina Representative Stella Kimbo proposed to inject up to 400 billion pesos. Now, citing Treasury data, Kimbo said stimulus funds can be sourced from undisbursed cash of over 1 trillion pesos from the 4.1 trillion peso 2020 national budget. Recto said leaders of the Senate and the House will meet in January. That's to discuss the congressional agenda over the remaining 18 months of the current government. Now, it may have been expected, but a deeper economic slump forecast is definitely not good news on any day. Here to help us make sense of those numbers, we have Security Bank's Chief Economist, Dan Roces. Good morning, sir.
Hi, good morning.
So let's kick off, of course, with those DBCC projections. A lot were already expecting them to downgrade that. But to what extent was this, a surprise? To what extent can you actually figure out which are the main culprits for this downtrend?
Well, the DBCC themselves said that it's primarily because of the lockdowns. They've begun to recognize the effect of all those lockdowns to, for one, mobility. Second is on, the general compression of economic activity. So that was actually a long time coming. No, we were expecting it to be released immediately after the third quarter GDP numbers went out. And a lot of analysts, including myself, actually downgraded the view further once those numbers were out. So, so it was expected to be along that range. But
Sir,
likely that's going to be on the deeper side.
What about the predictions of growth in 2021 and 2022? Are these necessarily better than you were forecasting, especially after that slump? They're still seeing 8 to 10% growth. Is this something in line with the budgets that they are proposing for the next couple of years?
Okay. One thing about the 2021 view is that it's, for one, it's purely mathematical. If we go by the year-on-year growth figure, let's assume it's 7%, 7.1% is our view. That means that the real GDP number, if you look at the value, that's below the 2019 actual real GDP growth value as well. So that's not growth per se, but it's recovery nonetheless. No, it's actually it's better than 2020 at least, but we're not yet there in terms of overtaking the growth potential that we were supposed to look at. No? So any number around the 7.5% growth figure is still a recovery figure. So that means it's going to be, that means recovery or the true trajectory might begin by 2022 and will likely get to the 6% levels, which is the target all along, by around 2023. No, so that's the situation. If you take a look at the actual figures now, what could accelerate growth? One is the vaccine, of course. No, if it's going to be widely distributed by the second half of next year, there's going to be ripple effect. Even if it's not going to be distributed here locally, at least, or a wider distribution does not happen here, there's at least going to be a ripple effect to us, which could be positive, primarily on the trade front. No, and more
Okay.
economies will likely be starting to open up, so that would benefit our OFW workers as well. Remittances numbers will bounce back. Um, Production also will, because there's going to be higher manufacturing orders, so that's going to prove better for our export numbers as well. Yeah, so that's one. Second is, of course, we need a fiscal stimulus to complement what the monetary authorities have done. No? In an expansionary macroeconomic policy, it has to go hand in hand. No? So what we're seeing right now is a prudent response on the fiscal side, which we can't fault the government for, because it's the tax base has essentially been destroyed because of all the business closures and some economic difficulties that we've been seeing locally.
All right, sir. One other economic data that, of course, we have to digest, unemployment figures, that is
Yeah.
to 8.7%, at least for the month of October, when you compare that to the highs that we've seen so far this year. But one other interesting thing here is that, there are still challenges when it comes to labor force participation rate here. The question is, when do you see the job market actually returning to pre-pandemic levels, and what's it going to take for us to actually get there?
Okay, well, it's interesting that you mentioned labor force participation rate. Um, that actually went down based from the July figure to the
Mhm.
one that was released yesterday. So that's a red flag that we have to watch out for, because primarily it means more people are dropping out from the workforce, likely because it's proving too hard to find employment. So they dropped out altogether, probably holding on, or waiting for their fortunes to turn as the economy recovers. So that's one, because um, further compression in the LFPR will mean that there's going to be some compression as well in household consumption, and we don't want that, because that's 70% of GDP as well. Okay, so recovery will come in employment once more. What it's going to go lockstep now in terms of more reopenings in the economy, and likely more businesses that will get revived. So that's where the pickup will come from. But until such time that there's still low confidence in terms of business, in terms of the business environment, that's going to be uh, there's going to be or the unemployment rate will still be at elevated levels. No, our projections is actually that by next year it might not be at our natural rate of unemployment, which is around 5%. It
Mhm.
could still be at 6%. We'll likely reach that figure by 2022, under the assumption that there's already full recovery by then.
This means, sir, that by come next year at least, there are still going to be hard pressed when it comes to consumption levels.
Um, Hopefully not. With more people getting employed, no, and as I mentioned earlier, if we assume that the OFW deployment becomes better, that's going to rebound to some positive consumption levels as well. But like I said, locally, the challenge actually lies locally. If we have to see more businesses reopening again,
Mhm.
um, something akin to a new normal, but not yet quite there, right? So, yeah. So,
Sir, I just want to
consumption.
jump on
Sorry.
that consumption point, sir, because a lot of that has to do with the stimulus, and there's such a
Mhm.
huge debate on whether the stimulus is enough. You've got you already mentioned Ben Diokno of the central bank saying you can't just use monetary policy. He's been calling for more fiscal support, but you've also got Secretary Dominguez saying that kaya naman.
Mhm.
If the confidence is actually there, that's actually
Mhm.
enough already. At which side are you on? I know you can't take sides, but at the same time they've also capped the budget deficit lower for 2020. So what does that mean? Does that mean that they're going to be spending less than what was actually initially planned? And how is this in relation to what we need to be spending in order for consumption to spur?
Yeah, well, capping the budget deficit might likely mean that it's going to stop there. No, I think from the January to September budget deficit is already at 6.7%, if I'm not mistaken. No? So we still have some room to reach the target of 7.6%, but likely, well, it came from them themselves. They're going to cap it at 7.6% GDP. So what that means is actually, well, we might have run out of time because it's already December. The budget needs to be zeroed out in order for it to get launched next year. So likely the fiscal spending that we are looking for might start by next year when some of the legislations get passed, if at all. Bayanihan 3 will prove to be a targeted fiscal stimulus package if it gets passed. No? So, but there are other legislative priorities. I think that's also geared towards the towards the fiscal front. Now you have create, you have the FIST bill, likely if any targeted fiscal stimulus bills will get passed. That's likely going to come after those priority bills. No? But like I said earlier, uh, fiscal support needs to happen in order for the monetary side to also get going. No? We're seeing already some pressures coming in from the monetary side. No? So that's likely born out of the need for a support mechanism for the policies that have been instituted already.
Okay, sir, let's close with that monetary policy. You were already saying we've had inflation higher than expected for the last sprint. Is this a good
Right.
thing? Meaning that on the one hand, we know that the supply side was affected from the storms. But on the other hand, is there some sort of demand, light at the end of the tunnel saying that
Mhm.
consumption might be picking up here? And at the same time, how does this affect the policy, which has already been preemptive, which already did a surprise cut? Ano pa bang kayang gawin ng BSP here given the fact that the loan growth has been slowing compared to previous months?
Yeah, well, the challenge lies right now with the BSP in terms of nudging loan growth as well. You know, the negative interest rates that we have will only serve to erode with the cash holdings of people. No? So if they keep it in banks, it's going to the value is just not there. No? So the correct way to go is to invest it. So I think that's also one of the nudges that the BSP wants to push for. So the challenge right now is how to restore business and consumer confidence back to a level such that it's more acceptable to investors in order for them to take out loans once again. No? So that's the challenge. In terms of inflation, uh, well, the print was a surprise, no? And I think it has something more to do with cost push inflation. It's not necessarily higher consumption levels, although it's there. But I think it has something to do more with the effects of the typhoons that we had. No? So it likely compressed the more volatile component, which is food. So we're looking at supply compressions there. So likely that's what pushed inflation levels to the level that we saw right now, which is actually a surprise. Yeah.
Okay, so at the moment you're actually looking at negative real interest rates, but as you mentioned, sir, it's going to need a bit more of pushing for all
Right.
of that money that's going around in the system to actually enter into the real economy and into the pockets of consumers. So thank you so much for those insights. That
True.
was Robert
Thank you,
Dan
sir.
Roces, Chief Economist of Security Bank.
Pleasure. Thank you.
And that's a first look into the business day. Today is Friday, December 4. I'm Danie Laurel.
Catch us again Monday next week at 9:30 a.m. I'm Jess Delos Santos. We are One News. Have a safe weekend.